So we are live now.
Excellent.
So, good afternoon, everyone. Welcome to the third PE and VC session of CII. I'd like to welcome our. So today we in fact have a esteemed guest, Shri Ashwini Bhatia, who is a whole-time member for SEBI. We also will be joined by Mr. Pawan Kumar, who is Director at Department of Economic Affairs. Amit Chandrai, who is our chairperson of CII National Committee of Private Equity and Venture Capital Committee, and Manish Kejriwalji, who is our co-chair. As part of the inaugural session, I'll like to say that what I've been hearing from the industry is that we have been investing about PEs, private funds amount about 6% of our GDP in the country, and it's probably bound to grow a bit much bigger. And today's theme, incidentally, is focused on seeing how we can make the domestic PVC industry more Atmanirbhar. And I would like to probably pass on to Mr. Amit Chandra here so that he can talk more about the theme and invite Shri Ashwini Bhatia sir to kind of give us the inaugural speech on the same. Amitji, over to you.
Thank you, Sandeep. I take great pleasure in welcoming all of you to this session of CII's third PE and VC summit. We are indeed very grateful to have someone like Ashwini Bhatia ji as the chief guest for this summit. He's indeed a man who needs no introduction, but just to understand the rich experience he brings to his role as whole-time member of SEBI and someone who interacts with us on a whole facet of important issues, I'm going to take the opportunity to give you a little bit of insight into his rich career. Prior to his current role, Bhatia ji was Managing Director of State Bank of India. Rarely do we have a regulator who has such wide and deep experience in treasury operations, retail banking, credit and investment banking. But importantly, before he became Managing Director of State Bank of India, Bhatia ji, like many of us, oversaw investments as Managing Director and CEO of State Bank of India Funds Management, which we all know is a very formidable business. We are therefore very excited as an industry to interface with him, not just as a regulator, but also to get his guidance on the roadmap for an accelerated growth path and doing so in a responsible manner. Bhatia ji, we are truly delighted not just to have you, but also have over 500 market participants who have joined us for this summit today. It's a signal both for the interest in this topic and also in hearing you speak. Before I invite you for your inaugural address, I would like to just set some of the themes that we have been deliberating on as a committee and which are relevant to this summit and beyond. As CII's PE and VC committee, we have work streams underway on thinking about these issues and interfacing with policymakers like you for the sake of not just attracting higher and better quality flows, but importantly, aiding national development. So over the last 8 years, the PE and VC industry has invested over $250 billion in India. This number has only been increasing rapidly over the last 3 or 4 years, in fact, at a double-digit percentage pace. Now, this number can be seen in context of a few key facts. In many years during this period, we saw unprecedented capital markets volatility. As a consequence, during this periods of time, last 8-9 months being a prime example, we saw foreign portfolio investors withdraw large sums of money from India. If it were not for the confidence reposed in the country by domestic equity investors and private equity and venture capital investors, our country would have had high market and macroeconomic volatility. The coming of age of these two categories of investors has been a big boon to national development over the past decade. PE and VC have been also integral to spurring the boom in entrepreneurship in India, which is finally taking root and has become an engine of growth and job creation and innovation. We are now the third largest startup ecosystem in the world, and with a conducive framework have the potential to do what has been achieved in other parts of the world like the west coast of the US. Now, PE and VC companies are far from perfect, but in general bring together higher standards of governance and practices like ESG, thereby facilitating market development and make jobs of regulators easier. Importantly, a study done 2 years ago showed that PE and VC companies backed by PE and VC create more jobs than others. They also generate more tax revenues for the government. In fact, for every $1 billion invested, $200 million of incremental tax and $600 million of incremental indirect tax was created in FY18. So it makes a lot of sense to create a conducive framework so that we get more and more market share for the dollars available offshore, but also for pools of capital available onshore. And therefore, it makes sense for us as a nation to see how we can maximize these flows in both a safe and a sensible manner. We believe that there are many areas that the industry can work with regulators like yourself and policymakers. And one of the biggest opportunities lies in building blocks for Atmanirbhar Bharat, PE and VC industry. And the time has come for us to ask, what can we do to replicate the success of the domestic mutual fund industry? And SEBI played a big role in that story, as you well know. And how can we do that, start doing that today for the good of the nation as well as investors over the next 10 or 20 years? With that, sir, let me invite you to share your perspective on the industry and the road ahead. Thank you once again for being with us.
Thank you, Amit. Good afternoon to all of you, ladies and gentlemen, the participants at the PE and VC conference of CII in creating an Atmanirbhar Bharat. First of all, let me thank you all for inviting me as the guest of honor for the summit. And it gives me immense pleasure to address this August gathering at the inaugural session of the summit. Availability of funds is one of the most crucial factors for success of enterprises at all stages. In this context, the PE and VC industry plays an important role in channelizing funds to capital needs of the enterprises, right from angel investment, seed investment for startups, till medium and late stage equity infusion in established enterprises. In furtherance to infusion of capital, AIFs also provide managerial capabilities to these enterprises. And it's no surprise that given the bandwidth that the investee companies get on their boards, I think today, as far as governance goes, we are much, much better off. SEBI, through its Alternative Investment Funds Regulations of 2012, regulates the private equity and venture capital industry in India. Venture capitals. AIF regulations provide for a dedicated subcategory under Category 1 AIFs, venture capital funds, which are required to invest at least 75% of their investable funds in unlisted equity shares or equity-linked instruments of a venture capital undertaking or in companies listed or proposed to be listed on an SME exchange. As of 30th of June of this year, there were 124 Category 1 AIFs, VCF registered with SEBI, which have commitments of approximately 37,000 crores, out of which funds amounting to 19,500 have been raised for investment and 16,000 have already been invested. Category 1 AIFs, venture capital funds, further have a subcategory of angel funds, which raise funds from angel investors and invest in startups which do not belong to industrial groups or turnover of more than 300 crores or family connections with any of the angel investors. As of 30th of June, there are 44 angel funds registered with SEBI who have raised commitments of approximately 3,500 crores, out of which funds amounting to 2,500 crores have been raised for investment, and 2,000 crores have been invested as reported by AIFs. So this is truly Atmanirbharta, right? These funds are actually going to the MSME sector. So coming from a banking background, this helps the country and also the banking industry in the sense that it de-risks the banking industry also. So full marks to the VC ecosystem that is helping the MSME sector come up in a very big way. Other categories of category 1 and other categories of AIFs also invest in venture capital undertaking or startups. In the recent past, SEBI has taken two important policy initiatives with regard to category 1 AIFs, venture capital funds and angel funds. Definition of startup was incorporated in AIF regulations in line with the definition provided by Government of India, so that the definition of startup is harmonized with the definition provided by government, and a wider pool of investee companies are available for angel funds to invest in. The list of restricted sectors from the definition of venture capital undertaking was removed to provide flexibility to Cat 1 AIFs in making investments, since most of the new age fintech companies in India are registered as NBFCs and have business models that require heavy initial capital investments. Let me come to the private equity side. PE funds get themselves registered under Cat 2 AIFs. As of 30th of June, there are 555 Category 2 AIFs registered with SEBI who have raised commitments of approximately 5.5 lakh crores, out of which funds amounting to 2.5 lakh crores have been raised for investment and 2.2 have been invested as reported by the AIFs. Out of the total investments made by Cat 2, approximately 50% is invested in unlisted equity shares, and equity-linked investments. These figures also include other kind of AIF funds like debt funds. Taking cognizance of the potential of AIFs as a source of long-term capital in providing solutions to problem of growing NPAs in the country, which has troubled the banking and financial sector, SEBI has introduced special situation funds, a subcategory under category 1 AIF, which shall invest only in stressed assets, such as stressed loans from banks and NBFCs, available for acquisition in terms of RBI transfer of loan exposures directions of 2021, or as part of a resolution plan approved under Insolvency and Bankruptcy Code, security receipts issued by ARCs, securities of companies in distress, etc. Recent developments, recognizing the ability of AIFs to raise capital, not just from own corpus, but also additional capital in form of co-investment, in order to facilitate managers of AIFs to manage co-investment of the investors of AIF. SEBI has introduced a framework for co-investment through portfolio management route, wherein the portfolio manager provides co-investment services to investors of AIFs, who shall invest 100% of their assets under their management in unlisted securities and shall be exempted from certain requirements under SEBI Regulations 2020. SEBI has also introduced the concept of accredited investors in the securities market, wherein AIs have flexibility to participate in AIFs with an investment amount lesser than the minimum amount mandated in the AIF regulations, which actually means that if you are an AI, you can invest as less as 10 lakhs, 20 lakhs, depending on your appetite. Further, large value AIFs for accredited investors, where each investor invests minimum amount of rupees 70 crores. So at the time this regulation came, this was $10 million, can avail of relaxation from regulatory requirements such as portfolio diversification norms, conditions for launch of schemes, and extension of tenure. Further, AIFs are allowed to simultaneously invest in units of other AIFs and directly in securities of investee companies subject to certain conditions such as additional discourse and compliance with concentration norms. Let me conclude by reiterating that a vibrant market for AIFs has to play an increasingly pivotal role to facilitate fund mobilization, mentorship for growing ventures and established enterprises in India, support and transformation of these emerging potential ventures into global ventures will help sustaining India's projected economic growth momentum and assist in the path to Atmanirbhar Bharat. Thank you so much for this opportunity, and I wish you all the best in all your deliberations during the conference. Thank you so much.
Thank you so much, sir. Manish, would you like to make some comments and close the session as well?
Is there, Amit, are we having time for any questions at all from others? I wanted,
Yeah.
Gautam especially, he didn't have a chance to speak in the last session.
Yeah, that's a
Gautam,
good
do you
point.
have any overall points you wanted to bring out in the inaugural session?
No, Manish, I think I've had both the privilege and the pleasure of being part of the multiple committees that SEBI has set up. And I think we probably failed to put it on record, but if you look around, it's very hard to find examples of a regulator which proactively sets up multiple platforms for engagement with industry players. And I think it's we should call it out. And to my mind, that's been one of the positives of why and how this industry is developed. And there may not be cases specifically under SEBI's domain. My memories go back to 2015 or 16 in the first APAC committee. As the chairperson, Mr. Naramurthy, went across the room and said, what do we prioritize for the industry? I think one of the inevitables of life tax came up. And while that's not in SEBI's domain, I must say that the changes that took place in the next couple of years in the income tax law was largely a result of the push that we and the motivation and the encouragement we got from SEBI. So I just want to say thank you for keeping up this engagement, and I just see this even more proactively being done now. And like I said, we are the beneficiaries of this. So Manish, I wouldn't raise specific points right now. We will raise that up in different platforms, but just wanted to place that on record.
Terrific. Thanks so much, Gautam. I see many others. Obviously, there's lots of people on the CII Hive, but even within the panel, I think we missed Amita earlier on last time. Amita, do you, Zia, have any overall views that you want to express in this inaugural session?
If I may, just a broad overall point is that given the amount of FDI that is coming in, there are often small pain points, which is lack of coordination in the regulations between SEBI and RBI. Those need to be fixed. There is some opening up where more money can come in, and Darshika, Amit, and I have been talking about an increased flow of funds, which can only help the country and what SEBI can do to facilitate that. By and large, I think that the one pain point that continues to remain, which is out of SEBI's hands, is the Press Note 3 issue. It has become a gating item for a lot of the big ticket funds, and clarity from the government has been sought for many times, not yet given, I assume for their own reasons. Not a SEBI issue, but is a problem as far as the PE funds are concerned. SEBI has successfully battled and won the FII fight on Press Note 3. with the government, but not for FDI. Otherwise, I think that, encouraging angel funds to come in, a little more flexibility for the VC space. And I think if we can have sessions with you, sir, once every quarter or once every 6 months, where you can push down our suggestions to people, and then rather than take up your valuable time, hook up the CII committee with the point person in SEBI, so that the detailed explanation, the logic, the neutrality of the suggestions, if you like, get to hear why SEBI has a concern, and then start dealing with it as an industry. I think that communication is critical.
So you have my word on it. Once a quarter, not an issue.
Excellent.
We would love to engage with you. And as Amit said, and as Gautam also just mentioned, we'll be as consultative and as democratic as possible, to take a word out of Gopal's afternoon talk. Yeah, I mean, why should we not be talking to you? And if the idea is to get in more capital, get in more money, it's welcome. And every morning these days when you open the newspapers, one page is devoted to startups. One page talks about startups, private equity, venture capital, and billions of dollars coming in. So why should we not enable more to come in? And everything today, geopolitically or otherwise, is in our favor. So let's make the most of the opportunity.
Thank you.
Thanks, Zia. Thanks, Gautam, for your thoughts. I just want to state that, listen, I can't believe this is the first real session we're having. And kudos to the entire CII staff for getting us off to this sort of a solid start where we have so many issues lined up. I think if you look at just the rest of the day today, in addition to the inaugural session, we next have a panel on the capital markets. We then move on, to addressing taxation, which will be from 4:45 to 5:30. Then the whole MSME conundrum will be discussed in the third panel, which will with Mani Krishnan Iyer. And then finally, the whole Atmanirbhar PE and VC industry, that whole discussion, which will have Pavan Kumar also, we will do from 6:15 to 7. So I think, it doesn't seem like we are in month one of the CII year. So congratulations to the entire CII staff. I think in addition to this, I must state, Ashwani-ji, for your, and this can only be a reflection on your, if I can use the word popularity, we have 517 people who are actually live on CII Hive right now, and an additional 30 delegates and media who are observing this and hopefully not recording it on YouTube. So once again, Ashwani ji, thank you for being a true partner, a thought partner for the first month. I know you will be an action partner for the remaining 11 months of this year. Thank you once again. Your knowledge, your access, and your approach has truly been refreshing. So with that, I want to wrap up a couple of minutes early and hopefully give Ashwani ji and the others a bit of a break before the others all dial into the next panel, which I think will start at 4 o'clock sharp. I'm in a different time zone, so I hope that's right. Sandeep, any other words, Sandeep, from you?
Thank you so much, everyone here. It's been a great session. And thank you, Ashwini sir, for facing and becoming the honorable speaker for our summit today. I do sincerely hope that, as mentioned by Anishji and Amitji, that we will have a fantastic interaction and discussion and deliberations as we move forward, which will help us move and discuss it further with SEBI as well as other stakeholders as to what we need to do in the coming year. So thank you so much, everyone here.
Thank you so much.
We should be starting in another 2 minutes on the other session.
Thank you, Ashwini ji. Thanks, Amit.
Thank you, everybody.
Thank you so much. Thank you.